In this video, we are going to be analysing Amazon, but to get straight into it, we do want to be staying on the economic calendar because watch out for tomorrow. We have the FOMC statement, but more importantly, the federal funds rate. So this is basically the interest rate. We can see we're forecasted 4%, so a 75 basis point increase. Our previous was 3.25. Now, this is key to note. We can see 9 times out of 10, really, they will be as forecasted. And if they are as forecasted, you will still see a big movement in the stocks. But it will be a bit more controlled. You may even be able to fade these moves. However, you can see June 15th, we did have actually a hike more than expected. And all you need to know is if interest rates go up, that is bad for stocks, it's bad for bonds. But if you're trading FX, USD will fly, all other basically currencies will crash. And so this is a key thing to be watching out for tomorrow. And the reason I'm making so much emphasis on this over the Amazon analysis is because Amazon is a big, big weighing on indexes. So it's basically just going to follow whatever this does. If this comes out as forecasted, we will most likely see a move either way. More likely down, but again, it's more going to be of a fade move because this is what's priced in. But if we come out at anywhere at below 4, so 375, 350, then stocks are going to fly. Amazon included. We could see the Nasdaq fly over 500-600 ticks in a matter of minutes on this kind of news. So do be watching out for that because again, doesn't happen often, but it's always key to know because either way, at 6 p.m. tomorrow, these stocks are going to move. That's 6 p.m. UK time, around 1 or 2 p.m. market time. So do watch out for that. And really the key thing, especially if you're looking to be a long-term investor, is if it's above 4%. If this comes out above 4%, stocks are going to crash. Again, it wouldn't be unlikely to see stocks like Amazon fall 5% on the day. So again, if you're looking at it on a long-term perspective, it could be a good way because again, these are shorter-term interest rates. They affect the market more short-term. And so if you see a rate like this, the next week, you're going to be probably just trending downwards. But if you're looking at a long-term perspective, obviously, it can be a great time to be buying in. Anyway, I did want to go over that because, again, it's going to have a big impact on Amazon. But what are going to be the key levels that we're paying attention to coming into tomorrow then? So $92, our first deviation on the 6-month chart. We did break this on the earnings. So this level is still valid. We will be paying attention to it, especially if the Fed rate comes out at 4%. This would be the level we would look to fade off. And what do I mean by that? If we fall down, which I do think stocks would be more likely to do if it comes out as the expected 4%, I do think this could be a good level where if we quickly pop down to here, start buying it up in this level in the anticipation that it kind of pushes back to where it came from. But again, if you're always looking to fade and you have access to the FX market, FX is always better to fade and it's a lot easier to fade. But if you're only trading the stock market, that's kind of how you have to fade if you're looking to fade. Now though, if we break that, and that is possible, especially, and again, if it's below 4%, I wouldn't look to fade it. If you're looking to buy it long term, great, buy at these levels because it is still quite cheap. But if you're looking to fade it, really wait for the stock to calm down a bit. Be tracking the Nasdaq and the S&P are really going to be the key ones, and even the T-note, see how it's reacting. When you start to see them slow down, maybe calm down a bit, that's when then you can start looking to maybe get long if you're only a long bias trader. So these will be the key levels that will be coming into tomorrow. Again, both possible depending on the Fed rate. Now, what's a bit less likely to coming into tomorrow, but again, if you're looking out a week, 2 weeks, even a month, then these levels are getting more possible, especially if markets stay weak. Then we're looking at $73, going down to $60, and their final level at 55. Yes, we do have levels going lower, but the likelihood of hitting them not all that much. And quickly then onto the resistances. If again the Fed rate is good, yes, we have a level at around 106. I wouldn't really be paying attention to that. I would be paying the main focus at 110. Reason for that, statistical mean on the 6-month, but also the gap fill location created just a few days ago on earnings. Now, if we broke that, again, unlikely tomorrow, but if you're looking at it on a longer term outlook, then 129/130 key resistance, and going further 147 and 153. Now the key focus of this is Amazon coming into the Fed rate tomorrow, so yes, we may go further than this in time. These are just key levels that we'll be paying attention to tomorrow. The key focus going on to around the 83 to really the $110 levels, but again, we want to provide you those levels just a bit further out, just in case we have a big surprise tomorrow, especially if it's against the consensus. And what do we mean by that? We're expecting a big we're expecting an increase of 75 points. If we come out at 50 points, usually get considered against the consensus, and again, stocks will fly. We could easily fly past 110, especially if it was like if it was only a 25 basis point increase, and we could easily push towards that 130 coming into tomorrow. So again, always be paying attention to the news. If you're day trading, you probably don't want any positions going into that news. Just look to trade the news instead. Anyway, that is the breakdown. If you enjoyed the video, why not drop a like and subscribe, and check out one of these 2 analysis videos.